In this presentation, we will take a look at multiple choice questions related to managerial accounting decisions and scenarios, going through those questions and then practicing test-taking skills with them. First question, we can produce a unit of product for the following costs. Direct materials, $10, direct labor, $34, overhead, $60, total product cost per unit, the $10, the $34, the $60 is $104. An outside supplier offers to produce us with the units at $90 per unit. If we buy from the supplier, then we will still have, if we buy from the supplier, we will still have 40% of overhead. We should either A, buy because it is cheaper, B, buy because both alternatives have the same net profit and it is easier, C, make because it is cheaper, or D, make because net profit is the same and we are less dependent on an outsider. Okay, so let's go through this again. If we were to see this question, we might think first, hey, there's going to be numbers involved. Are there any numbers in the answers? I don't see any numbers. Maybe it's got numbers in it and it's going to be an easy question, which I don't have to do the calculations on. Why don't I go to the last sentence and see what it says? We should. Okay, let's go to the second last sentence and see what it says. If we buy from the supplier, we will still have 40% of overhead. Given just that sentence, if you worked a few of these scenarios, you probably would think just by that sentence that, oh, this is going to be that scenario where we can either make the things internally or buy them externally, whether they be inventory items or some other item within the production process. And that's what, of course, we're dealing with here. We're dealing with a situation where either we make something internally or we purchase it externally, and we got to make the decision of that. Now, whenever we have a decision like that, the question is always going to be coming down to fixed cost versus variable costs. In other words, when we look at the unit costs of the thing we're making, there will typically be something like overhead, which is going to include an applied portion, a portion that is not going to go away even if we eliminated the production process. And that's what we got to take into consideration when we make our calculation here. So the scenario you're looking for oftentimes as well is going to be, I would assume that the offer of $90 is going to look good given the 104. It does. And then normally under these type of questions, we'll find out that it's not a good offer given the fact that a lot of this overhead is not going to go away if we took the offer. So let's see the calculations related to that. Common scenario for this type of question, we're just going to lay out the data here. We're going to say direct materials, direct labor, and overhead. And of course, the key component is going to be the overhead that we're considering here. We've got $10, we got the $34, we've got the $60. If we were to sum that up, giving us the total, we're going to say that the total cost is $104. Now, of course, the $104 here compared to the $90 looks like the $90 is a good offer. It's cheaper than us to make it internally. Of course, the question here is the overhead of $60 here. It's saying that we're still going to have 40% of overhead even if we accept the offer, meaning we applied out part of the overhead here. So 40% of the overhead is still going to be there. So if we buy from the supplier, we will still have 40% of the overhead, which means we're going to remove 60% of the overhead. So, right, because 100% minus 40% means that 60% is going to be the portion of this overhead that will go away, and 40% is going to be the portion that will still be sticking around. So we're going to say of that $60, we're going to have, and you could say 1 times, 1 minus 0.4, 40%, or 60%. Is going to be 36. We're going to have the same $10, the same 34. If we were to sum that up, then we've got the $80. So this is the typical kind of answer. Notice the $80, what the cost, if we were to take away the applied costs, is less than the offer price. That's kind of what you would expect, because that's going to be the type of question that's going to emphasize the point here. Why would this be a case in real life? Because sometimes we apply overhead for other decision-making processes, even though it's a cost that will not be removed if we were to remove the production process. So $80 is less than $90. So what do we want to do? We want to keep producing them internally. So here we go. Buy because it's cheaper. No, it's not cheaper to buy. Buy because both alternatives have the same net profit and it's easier to buy. Yeah, if they both have the same profit, that might be a consideration. Note that D says make because net profit is the same and we are less dependent. So if they came out to be the same price, in other words, we do have a split. Should we buy or should we make them? Well, it might be easier to buy them, but it might be the fact that we don't want to be dependent on a supplier, so we might want to make them. So, but in our case, we're going to make them because it's cheaper. So that's what we're going to do. Final answer, C. Next question. 20,000 units now. The variable production costs for per unit $2 and total fixed costs are $15,000. Sales price $10, or we can process further for an additional cost of $30,000. Processing provides 17,000 A and 3,000 B, which can be sold for $13 and $11 per unit respectively. Assuming we process further, revenue would be what? Okay, so if we were just to glance at this problem before we were to read it as I did there, we might say, I see numbers. Are there numbers in the answer? There are numbers in the answer. So this is going to be some type of calculation question. Why don't we go to the final question here, because sometimes the calculation isn't what we would assume, because we know this is a process further question, but maybe they're asking some easy component of it, not the full calculation of it. So we're going to say, all right, assume we process further, revenue would be. So revenue, so they're looking for revenue if we were to process further. Notice what they're not asking for. They're not asking for should we process further or not, or what's the net revenue, or what, the difference between the two options. They're asking just for revenue if we process further. That's a little bit unusual, right? So you have to be, that's not what you would expect from this type of question. It's a little bit easier than we would expect if we catch that key word. So we're looking for the revenue if we process further. So we have 20,000 units now. The variable production costs are per unit $2 and total fixed costs are 15,000. That's what the cost was to get the 20,000 units that we have now. So normally under this type of question, that's going to be the irrelevant costs, because they're going to be incurred whether we decide to process further or not. So that's going to be the key to this type of question. We're only breaking down the analysis of the relevant decision, which is at this point forward. Costs related to the production process up to this point are not relevant with the decision-making process as to whether to process forward from this point. So then we have the sales price of $10, or we can process further for an additional cost of $30,000. So we could sell them now for $10. We could process them further, which costs another $30,000 to do. So if we processing provides 17,000 of A. So I'm assuming now when we process further, we have 2 units is what this is saying. So we had 1 unit and now we process further and we have 2 goods that we could process further, A and B. So we're going to say, all right, A and B. If we process further, we're going to get 17,000 of A, 3,000 of B, and they can be sold for $13 and $11 respectively. And so that's going to be our revenue. We're going to say, all right, so there's our units times our sales price. These are units and sales price. This is if we process further. So this times this. We're going to go ahead and under that. There's a little bit of a twist here that we had 2, when we process further, we ended up with 2 items we can process further, 2 separate products that we process further to create. So we're going to say, all right, the sum of those 2 is going to be the revenue, and that's going to be the 254. So again, that doesn't answer the normal question, which we would expect is what should we process further or not. It's not asking that. It's just asking for the revenue if we were to process further, which can be a little tricky in and of itself. But the answer then should be the 254,000. So if we go through here, we say, 254,000. That's the one. Now, again, if you don't read that carefully, you might do the more complex question, work the whole thing out, and find, the net revenue or something like that, some other calculation. Next question. So we have the same data here, so let's go through it again. 20,000 units now. The variable product cost per unit $2 and total fixed cost $15,000. Sales price $10, or we can process further for an additional cost of $30,000. Processing provides 17,000 of A, 3,000 of B, which can be sold for $13 and $11 per unit respectively. The incremental revenue to process further. So key term here, not just the revenue, but the incremental revenue. And so we're looking for the incremental revenue rather than just simply the revenue to process further. Okay, here we are back in our problem. Now, we're looking for the incremental revenue, so I'm going to adjust this last component here. This last line item that's from the last question. So we're looking for the incremental revenue. So we figured out last time what the revenue will be for if we process further. If we don't process further, we can say, okay, the revenue, the units that we're going to have if we don't process further is going to be the 20,000. And we know that we're going to sell them at $10 per unit, so we'll say $10. So if we decide not to process further, 20,000 times 10, we'd have the 200,000. The incremental revenue, the difference then between if we process further or not, is going to be 54,000. Now this doesn't help us complete the decision. Again, they didn't get to the final question. They're asking for the incremental revenue, not should we do it or not, which means we're going to have to take into account the incremental revenue and the cost, the incremental costs as well. But be careful what they ask for. This is what they're asking for. This is what we'll give them. We're looking for the 54,000. That's going to be E, 54,000. Final answer.